Welcome to the Co-Host Bros Podcast, where we break down everything short-term rentals, entrepreneurship, and building a profitable hospitality business. Whether you're a host, investor, or property manager, we share real strategies, real insights, and real experiences to help you scale smarter and grow faster. Let's dive in.
Hey everybody, welcome to another episode of the Co-Host Bros Podcast. My name is Matt Codd. I'm here with Austin Spitzenberger, and today we have another savvy realtor, Mr. Mike Stone.
What's going on, gentlemen? You said another. I didn't know you had a first. Who is your other savvy realtor?
We had Tyler on, and we had Joe
great.
on as well. Well, we've had Joe on twice.
Oh, awesome. I didn't realize that. That's fantastic. Great,
yeah, we had
Joe
company on when he was a realtor virgin before he became a realtor, and then we popped that, and then he started selling stuff.
And he started slinging because of you guys?
Yeah, no, not because of us. No, that was all him.
No, he is fantastic. He's doing a great job. I emulate him as much as I can since I joined Savvy.
Yeah. No, I love it, man. And I think definitely as of today, what episode are we on, Matt? Like 80-ish something?
90. This is 90, I think.
Wow, good for you guys.
Yeah, and I got to give it to Mike here. He takes the cake out of 90 other guests. He's top-notch, best dressed.
Yeah.
So you win the award of best co-host bro podcast episode dressed.
This really is 90. I just double-checked, too. So, yeah, this is episode 90.
That is fantastic. Good for you guys having the commitment. And as much as I appreciate the compliment, I'm sweating like crazy in here. So this might be a jacket off conversation very quickly. But in the meantime, 90 is amazing. What do they say? It takes 20 to be in the top 1% of podcasters. And you guys are smoking that right now?
I think it's
I
something
have no
like
idea.
That. I think it was like 20 or 21. I don't know.
I think that's a Hormozy thing. He's like, if you post 5 or something, you're in the top 20%. And if you post 20, you're in the top 1% of podcasters. So good for you guys. I respect the consistency.
Well, we like to be the top 1% of podcasts in general. Would be great.
Yeah, get that on listeners too.
Yeah.
Good stuff, guys. So what are you guys working on these days? I'd love to hear about you. I'm sure your audience would love to as well, since they follow you more than they follow me. I'm glad to introduce myself, but catch me up what you guys are doing.
Oh, we're on Mike Stone's podcast, Austin.
You flipped the script on us. First time, best dressed, and first time to ask us the intro question. I'll let Matt go first.
I mean, just hustling out here, collecting contracts and working on that. Figure out how I can squeeze a turnip and make more money no matter what.
That's
the goal.
Love it. What market are you guys in? Not to totally flip the script. That's very funny, but
no, it's
just
good.
curious.
That's what we do here, man. We just go off the cuff. It's what we do.
Good stuff.
We totally wrote all this down, everybody, by the way. It's like everybody has notes. I sent out memos and then we color coordinated too. It was wild. I'm like in Houston and Galveston, greater Houston area. So
excellent. Nice.
Yeah,
have some friends who do well out there.
Yep. Just depends on where you are. I mean, It's an interesting beach market. At least Galveston is in comparison to like Florida. But yeah,
absolutely. Good stuff. And Austin, you're in the same business with him?
No, we're about like maybe 2.5, 3 hours away. We're in like the Texas Hill Country. So like anywhere from Fredericksburg and kind of in this hill country wine area between Austin and San Antonio.
Very cool.
Yeah. So just doing that, building the management company. I'd say the bulk of our listeners are STR investors / people building. I would say maybe boutique management companies, 0 to 70-ish listings, something like that. So we manage about 65 in the Texas Hill Country. But yeah, man, that's kind of all. That's kind of all about us. But how about you, man?
I heard you were in Rockport.
Huh?
I heard you're in Rockport. I'm just kidding. I saw your LinkedIn post today. That's why. I said I heard you're in Rockport.
Well, I guess I should drop that nugget too. But yeah, we manage on the Gulf Coast as well, a little bit south of where Matt is, in like Port Aransas and the Rockport area. We have about 10 listings there. We're significantly smaller, but yeah, we're smaller there. But I'm looking forward to adding like 10 to 20 listings in that area next year if they're a good fit. But yeah, man, I think
very cool.
Yeah, mostly about me, but let's get back to the Mike Stone show. Like, what's up, brother? Like, how are you doing? Give our listeners, for people that don't know you, a little bit of background
Sure.
of like start to finish on kind of your
Okay.
career first. I guess your career first and how you got into the short-term rental space.
Sure. Yeah, happy to. So before this, I was an attorney, and the truth is I hated every minute of it. I enjoyed law school. I had great friends, great grades, great internships. I enjoyed the theory of law, and studying it was actually really enjoyable. I even liked the challenge of it. As I got out of school, it went downhill fast, man. So my first job was working for a judge on the Arizona Court of Appeals, which is a highly coveted position when you're first out of school. Like, a lot of people want that job, so it felt good to be able to be accepted. But man, when I was working in the judge's chambers, we were going through cases that she would get before her, and I'd help her write the opinions on these cases. And I don't want to go as far as to publicly say that she was corrupt, but I will say that she was outcome determinative, and whoever she wanted to win, she would reverse engineer the law around it. So we would have arguments in chambers of like, you're blatantly wrong. That's not how that works, and you're going to screw somebody. And she'd say, well, this is what I want to happen, so figure out how to write it that way. So I'd be writing these judicial opinions, and I would not feel good about what I was saying. And we'd go back and forth. And it was just, obviously I don't have any leverage. She's the judge. She makes the calls, and I just had to follow her lead. And it was awful. Not a good lifestyle, not a good position to be in. And honestly, I'm not meant for office life or having a boss. So that was just not really where I wanted to be. That's a 1-year position. So whatever, it was like 9 months. I ended up leaving early to go start my career in what they call big law, which just means a large law firm, which for anybody who knows the practice of law is the least enjoyable way to do it. I graduated during COVID. So when I got out of the clerkship position with the judge, like 9 or so months later, everything was in a hiring freeze. So the litigation firm that I was going to work for, I was going to do commercial litigation, business litigation. So I had been working on cases that were just multi-million-dollar lawsuits between doctors and larger companies and entities. And it was fascinating. It was really interesting. And I helped on a couple of jury trials that were intense. And I could get behind what I was doing, especially when I agreed with my own clients, right? But like, I was just the intern. I was doing all the down and dirty research and pulling together long drafts of briefs and memos and, advising my attorneys how to argue a case. I loved it. But once the hiring freeze hit because of COVID, they're like, look, Mike, we can't take you on here in Phoenix. We can't take you in Seattle and Denver. That was true of every law firm of that size where I wanted to get that big salary and deal with the high stakes litigation. And so what was still going on during COVID was divorces and car accidents. So I could either do family law or insurance defense litigation. And I like contracts, so I chose the latter. Truthfully, I ended up hating that too. It's a matter of billing your time every 6 minutes, being accountable to an org chart of bosses above you and partners in the firm. And just awful lifestyle. Still working 60 hours a week, but capped. Like, eventually you can grow into partnership and more money, but at a much slower rate than entrepreneurship. And I still hated having a boss. And I didn't like defending the insurance companies because ethically it didn't feel good. I remember deposing a plaintiff who was suing my insurance company for a car accident that she was in. And she was all sorts of banged up. She was in so much pain. It was so agonizing for her. She was crying during the deposition. And it wasn't fake. I could tell. And so I went back to my clients and I was like, listen, like, if there's ever a time that we have to pay out, now's the time. It was like $125,000 or something like that. It wasn't even that crazy compared to some other cases that they've seen. And I was like, this girl deserves the money. Like, let's just settle and move on. And they were like, no, find a way to win. And so I didn't have to finish that case, which was nice. I settled several other cases for $0. Like, you can't do better than that. But because I'm defense, like, zero is the win. But like, when you win, that's net neutral to them. They're like, we never should have been sued in the first place. And when you lose, they're pissed. They're like, well, now we're losing money. So there's no good energy in that room ever. And then you're arguing with the other side. You're arguing with your own client. Like, just what a shitty position to be in. So as soon as I could, I got out. And to me, that was seeing an Instagram ad for an Airbnb coach. And I was like, oh shit, low barrier to entry, my own boss. I can make this happen. It was arbitrage at first. So I didn't end up liking that coach. I wouldn't say his name, but I got other coaches who I loved.
No, I'm just kidding.
No, I'm not going to talk smack about the one guy I didn't like. But I found Sean Rakajic, who I do like very much. For arbitrage specifically, I no longer like that model. I ended up switching to co-hosting and growing a co-hosting business instead. But I respect Sean. I joined Mike Sjogren's STR Secrets program. Sjogren, Mike Riley, Chris Petsy, Daryl Domenico, they saved my life and helped me build this business. And from there, I was free.
Yeah, I love it. We've had, man, dude, I would say like double digit STR Secrets members on this podcast specifically, and they do a really good job. We've had Mike, Emmanuel, Chris Petsy, their leadership team.
Oh,
We've had
absolutely.
yeah, we've had the whole squad on there, and then like a bunch of my friends are in it. I'm not in it, but yeah, I mean those people. It's just every time I log into Facebook, one of them is leaving their W-2 job, or I
Right.
went to 0 to 10 listings in 6 months or whatever. So whatever they do there, whatever the cost to play in their mastermind is definitely worth it, right?
We need a referral code. No, I'm just kidding.
Yeah, for sure. I mean, anyways. But no, I mean we do. Like we're not incentivized to push their thing. They're just the results they produce like really speaks for themselves. But man,
Agreed,
I wanted
big
to go
time.
back. Yeah, I wanted to go back. Like, what is your thoughts? This is not STR related specifically, but it's one of the questions that came to my mind. So, what do you think about AI and how is it going to change the legal world of doing things? There's so many times where I've done something where I've taken a contract, taken an insurance policy, taken something and dropped it into ChatGPT, and I said, "Hey, run through this 50-page document, give me the high level, whatever, insert scenario there." That has to be like eliminating some jobs in that field, right?
It's a very good question. It's a very interesting question. So I'll start with something that's a little funny, and then I'll answer directly. So what happened as soon as ChatGPT started getting popular? I'm talking one of the original models. So, an attorney was caught requesting ChatGPT to write a brief and cite case law, and it was just trying to get out of doing. The attorney was trying to get out of doing the work. ChatGPT wrote a beautiful brief and cited case law, and the attorney submitted it to the court and said, "Here's my opinion." What happened was those cases were fake. It hallucinated cases or invented cases, cited fake law that doesn't exist. And then the attorney, I don't know if he got disbarred, but he certainly got in trouble for not even checking his own citations to say, "Hey, this is the law right now." So ChatGPT just faked an answer and it sounded cohesive, but the guy didn't double back to make sure everything was okay. Now I think ChatGPT is better than that, but the difference maker there, I don't know the exact status of this. As an attorney, we have a few major research tools. One is called Westlaw, another is called LexisNexis. And these, among a couple others, are your primary sources of actual case law that's recorded, codified, and legitimate to use in court. If ChatGPT has access to the full database, then it can be an attorney today. Like that's all it would take is having the training on a full set of data. It's all language, so an LLM can handle that no problem. And it could spit out case law and think critically in a way that an attorney also could, but a lot slower. And not only the thinking, but then also the drafting and then the editing. And it just, right now, ChatGPT could be a lawyer today with the proper training. And so I don't know the status of the IP and the data sharing, but if it were to have full access, it would be all over. So I do expect people to lose jobs. The other interesting thing is I mentioned billing every 6 minutes. I, as an attorney, and this is common in big law and corporate practice, every 6 minutes you're accountable to tell your client what you did. So you bill in a tenth of an hour, that's where the 6 comes from. And you say, okay, for this 54 minutes, a 0.9, I was researching this case. I learned about this case. Okay, for the next 1.5 hours, I was drafting notes about that case that'll help you on the litigation. And you stack it until you have, 8, 10, 12, whatever hours for the day. And if it were ChatGPT, that's seconds. That's literally seconds. So what will end up happening inevitably, in my opinion, is full training, whether it's a custom GPT or a full-blown ChatGPT or a Grok or whatever, we'll have access to this data and we'll be able to create coherent, accurate drafts with well thought out arguments that then the attorney can just sit there and go back and forth, disagreeing, arguing, close this gap, edit this phrase. How do you cite this instead of that? I want more accurate case law to the venue as opposed to something that sounds better, but it's from another state. There's going to be so much development in how attorneys can use AI. And how much do you hear this in every industry, right? How do you side with the robots and make them help you instead of just getting smoked and replaced? And for the cost too, when you're talking about like several $100s an hour, Some of the best attorneys are doing, 385, 685 an hour, anywhere in between. When you can get things done in seconds, you're talking about thousands and thousands and thousands of dollars of litigation fees that you could be saved. Even in-house counsels can use that now.
That's crazy. Well, I'm glad you didn't do family law. My aunt was a family law attorney for a very long time. And then she had to defend me on a criminal case long time ago, everybody. And
Sounds like a story for the podcast.
It is a long story. And after that, she decided to take up criminal law. And she said because family law she did not get paid. She was always chasing money. So,
oh, wow. That's interesting too.
Yeah. So now she does
that
criminal
makes sense.
law.
That makes sense. I guess after a divorce, people are in rough positions, financially. And so to then come out of pocket for thousands of dollars. What I heard about family law is that some people enjoy the gossip and the tea of it. He cheated on her and he said, I'm not going to do this. And then this happened. Like, who gets the kids? But that's like I'm not here for Maury. You know what I mean?
Yeah.
I don't need that kind of low quality entertainment. So I didn't want to do that at all.
Yeah, she'll be like, I got a multi-murder case, and I'm like, you owe me a cut, man. Like I inspired you. Like, where's my money? Like, I need money on everything you're billing. A little bit about me, everybody. Anyway, I'm not a hardened criminal or anything, but we can go into that that's for a stage speech someday. Anyway, so Mike, all right. So
that's great.
You're co-hosting. So how long did it take you to like quit your job co-hosting? And then also what made you decide to move to selling real estate?
So I quit my job as an attorney in 6 weeks, 2 weeks notice, 8 weeks I was out. It was thanks to Sean Rockadich because he helped me get my first arbitrage deal. It was a fourplex in Central Phoenix. That one deal replaced my entire salary. And I mean, it was not without risk. Obviously, you take on the general risk of arbitrage and paying their rent first and then making your money later as profit. But it was a fantastic deal. And I was making in cash flow enough to support my whole lifestyle. Even after I spent probably, on that fourplex, it was not the nicest. It was two bedrooms, a 1 bedroom and a studio. So I probably furnished the whole thing for $40K or so. And so I put that into the business. And my mindset at the time, for better or worse, was as long as I'm breaking even on the business and my life expenses, I'm getting an education. I'm learning how to get out of a W-2 and I work for me now and I'll build upon this. So let me just cover my expenses. And I far exceeded that. I was lighting it up, making a ton of money. And so I was out. It was relatively a breeze. I then did a second and a third arbitrage deal. It was another fourplex and a duplex. Well, I guess it's not so much a duplex, a single family with a casita in the back. That one did fantastic too. My second fourplex did not do very well. And that's when the risk of the arbitrage model dawned on me because I'm paying the rent, I'm paying the maintenance, and I'm paying the utilities. In my first deal, I didn't pay utilities because I would cover basic maintenance, which was limited. I was running a very clean operation. There wasn't a lot of headaches, and I was very good at it. I was very close with my guests. I was very finger on the pulse. Like, I wasn't managing through VAs, and Airbnb wasn't as ruthless back then either. It was 2021, so they were just nicer to host in general. Plus, it was post-COVID travel demand. So it was very easy to stay booked and I had plenty of money to cover whatever I needed to cover. My second deal, I was paying the maintenance and the utilities and my rent was more than double because the house was just that much nicer. And I was barely covering myself. And I spent $75,000 on that furniture or so. Long story short, that went poorly. And I went to Sean Rockji's actually before I did the deal. And I was like, should I do this? He's like, I don't know, man. Like, it's a little close. I don't know if I would do that deal. And I got cocky because I was like, oh, my first deal's going so well. I'm doing really well with the fourplex. I'm moving people around when I got a, gap in the calendar and I just shift them to a different unit. So I'm really maximizing my occupancy. I felt like I was able to take it on and it wasn't great. So it was at that point that I switched to co-hosting. I found Shogren. I knew him already through his STR Secrets podcast with E. Big shout out to Emmanuel Pani. Love that guy too. I should have shouted him out earlier. And it was a smooth transition because, as you know, co-host, you have no risk. You take on a unit, You're $0 out of pocket. You're not paying for furniture. You're not paying utilities. You're not paying maintenance. When I make money when you make money as the homeowner. We're now aligned, and my goal is to make you as much money as possible. So you're making more money with me than you would as a long-term rental or with another management company. And I could do that because I'm very good at it. And I just was able to deliver for my clients as a co-host. So I'm in with no risk, only upside. And that's obviously much more scalable too, because I'm not refurnishing and pouring my own profits back into the next unit. So that was the launch point for co-hosting. I scaled that up and down through the years of more and less units and cutting bad owners, cutting bad properties, adding more good ones. So I loved that model for a while. That actually, I sold that business last May. So it was about 7, 8, whatever math months ago. I sold that business, which is to say I sold the underlying contracts, which isn't a thing in arbitrage either, to my knowledge. You can't really, I guess maybe you could sell an arbitrage contract if it's long enough, but it's not secure. A co-host contract is a valuable asset that somebody will buy, and it's a lot more, it's a lot easier to find somebody who wants to take over a co-host contract. So I sold my contracts in May, and that was after I had joined Savvy Realty. So it was just a perfect timing, smooth transition for me to get into being a realtor. I decided to do that in November is when I actually joined Savvy, onboarding, blah, blah, blah. We really got started together last January. So it's been about a year of actual hustle. I never wanted to be a realtor. Residential real estate doesn't interest me. I don't want to sound like a tour guide. Here's the kitchen. Here's the bathroom. Do you like it? Like, that's not fun for me. But working with investors, especially having 5 years of experience in Airbnb specifically, it was very exciting for me to say, hey, I can help you underwrite and acquire the best deals in my markets and know for sure that you're going to do well. I can run your comps. I could tell you the vision of what you need to do to amenitize and design the place to maximize your outcomes. I understand the tax implications. I understand what could go wrong in a very real and tangible way from my prior experience with the one bad deal I did. And so I can help ward off those potential issues in advance before you acquire. And so I really treat it more like a financial advisory as opposed to just being a realtor showing how pretty a house is, because I understand the markets and the upside. So when I met with, it was actually Jeremy Worth is a friend of mine from STR Secrets. Again, Mike Shogren delivering, because a phenomenal network. And Jeremy said to me, he goes, why don't you be a realtor for Savvy where you're helping people with investment properties and not just residential real estate? And to me, that was a no-brainer. I loved that idea. So I jumped in, dialed in with Trish Bartley as our queen of the expansion group outside of, there's, the main hub with Tyler Kuhn is in Asheville, North Carolina. Trish runs the entire rest of the show nationwide. And so I tapped in with her. Everything made a ton of sense. And she gave me the faith that working with Savvy and following the Tyler Kuhn system would work. And it did. And so I just fired off, and I've just been helping find amazing properties that make a ton of money, cash flow like crazy, phenomenal returns, and maximize the execution.
Yeah, it's killer. So what made you, I want to back up a little bit. What made you sell your co-hosting business? Why didn't you decide you wanted to keep it at the same time?
So one of my problems with the co-hosting business, I never got good at managing VAs. I fully admit I hated everything about managing VAs. So I wasn't able to extract myself from the business professionally. I have an assistant, Ava Kate. She's fantastic as an assistant. She's been my assistant ride or die through all sorts of different iterations of the business, including STR property management, MTR. Now in the realtor side of things, she helps me project manage renovations. And I'm actually back in property management, which I'll get into in a second. And she has been fantastic. She's also a designer. We're 50-50 on our design business. I'll bring that up later as well. But outside of her and I was still just very much caught up in the business. And so I really didn't enjoy it anymore. It was great when it was better than being a lawyer, but as you elevate in any discipline of your career, things normalize, and I didn't enjoy it anymore. So I felt stuck, and I was also kind of struggling to scale. I wasn't growing as fast as I wanted to, where then I could take that money, pay local operators, if not a VA. And so I just was getting kind of sick of it, at which point I was in this transition with Savvy Realty, and it just made so much more sense. anybody who knows me will know that I'm a better salesperson, helping people solve problems and find, hey, this is the deal we should acquire. And then I'm out, as opposed to being that integrator manager mind. I'm just not that guy. I'm a visionary. I can see where we're headed, and I can encourage people to go do that. But I am not an integrator. So it was easier for me and more lucrative and much more fun to help people acquire properties for them to go hire a property manager than for me to try to manage myself.
Yeah, it almost seems like when you're making this life decision to become an attorney or lawyer, like it's almost like, was your reasoning behind it like just money? Or was it like, because to me, when I just talk to you, like I get the vibe of like you're going to be good. You're in your lane now. Like you found your
Yeah.
lane and you're
Yeah.
good at sales, you're good at speaking, all that
Thank you.
stuff. And I just do not get attorney vibes. So like what was the reasoning where like did you have this change from introvert to extrovert, or like what happened? Because I just don't get, I don't see it.
That's so funny. I actually was fantastic as a lawyer. I just hated it and just pushed through. But you're right. It was very money driven. Before that, I was just doing, bullshit jobs. Like I worked in hospitality for a while in restaurants and everything from busboy up to manager, when I was a kid. And it was fine. Like I liked the people side of it. And even just being a server or a bartender, like I'm selling, I'm making jokes and I'm moving on. Like that was fine. I'm not managing something on a longer term basis. The attorney stuff worked because I am well spoken and I write very well. So the skill set applied, but the lifestyle is what I hated. The lifestyle didn't apply. And I was very much an extrovert then too. So it was, to your point, not a good fit, but I thought it would be because I'm like, oh, lawyers, doctors, accountants, they make money. I suck at science. I suck at math. Let me go be an attorney because I'm well spoken. And it worked for a while, sort of. I just didn't enjoy it. And truthfully, what's funny is it's, everything is what you make of it, right? And limiting beliefs about math is what drove me to say, okay, well, I am better at writing. Now I'm fantastic at math. I could do math in my head now because I care enough to practice it. So now when I'm underwriting deals and obviously leveraging spreadsheets anyway, I'm not doing mental math on, dramatic formulas. I'm just putting it in my spreadsheet and understanding conceptually what that does. So yeah, the attorney thing was a lifestyle disconnect more so than a skill set disconnect. And a lot of people are in that same position. I'll tell you, a lot of my friends, a lot of my old network of people who just push through it because it's their identity. I am an attorney. This is what I do. I don't like it. And I don't like the amount of hours or the accountability to my bosses or whatever, but they don't have the guts to go be an entrepreneur, which is something that I take pride in. Is I've never had an issue with that. My mindset coach calls it the terror barrier. When you're too scared to push through something, but if you were to, your life would skyrocket. Your career, your success, whatever it is that you're aiming for would skyrocket. I will always make that decision to push through and take the risk. And that was the best decision I've ever made.
Dude, you just summed up a W-2 employee. You just grind through it. I don't think many people who are working for somebody else has a job that's like they absolutely love, right?
Right. Right.
Things like that. Best job I ever had was bartending just because it was fun. But
Isn't it?
It's fun, dude. And it's like, there's little tricks you learn too. It's like,
Yeah.
for instance, it's like people always say like the Long Island iced teas aren't strong enough. I just wouldn't put sweet and sour in it. Just don't put sweet and sour in it. They think it's super strong and they start tipping you really good. It's like a little tip if you guys are bartenders out there. Say I made it super strong for you and just don't put sweet and sour in it.
That's so funny.
Yeah,
I love bartending, man. It was fun. Yeah. If I could make unlimited money as a bartender, I could have stuck that out a little longer. Maybe not forever, ever, but it was fun.
Yeah, we can get around $100 an hour or something. I'd be cool with it. Chill. I'll be there till 2. I mean, I go to bed at 8:30 normally, but I'll be there till 2.
That's right.
Yeah, dude. So, my little birdie told me that you were raising money for some projects and stuff. So, like, tell us about your projects you got going on.
Absolutely. So I, in my continued aspirations, want to get into the hotel game or have wanted to, and now I am. And so I have a couple different hotel deals that I'm raising money for through different networks and different circles. I am the GP on one deal in Page, Arizona. I am going to be GP and starting another one that's going to be a lot larger in Sedona, Arizona, which is my favorite market in the country. I'm a little bit biased maybe because it's kind of my backyard-ish, but it is such a good market. And I'll get into that at some point on this call. But we're going to do a beautiful high-end luxury resort there with an affordable housing component. So I'll talk about that next. And then I met a group that hired me on as a contractor to do capital raising for a massive hotel deal. It's going to be $110 million raise. I'll start with that one just because it's fun. They have a deal in Vegas right now, a hotel in Vegas right now that is functional, operational. It's an AI-backed property management software that combines with a floor plan that's pretty unique. When you stay at a hotel, if you're going with a family, generally speaking, let's say you have a family of 8, you got 4 rooms with 2 beds in each or something like that, whatever works for you. Obviously husbands and wives, brothers, sisters, who's sharing, but you need multiple rooms. What this hotel has done is created a floor plan where you get one common space, kitchen, living room, whatever common areas that you want, an island, and this way you can have the family together, and then has bedrooms with locked digital codes between a bedroom here, bedroom here, bedroom here, bedroom here, up to 10. So you could have 10 people sharing the same room, but they feel like they have their own rooms based on the floor plan. It's very cool. And then the AI behind it, first of all, it knows where to put you in the hotel to maximize the space in the physical building. And then it also knows your hospitality preferences. What kind of coffee do you like? What kind of drink do you like? Name, family history, like all this stuff is now in an AI tool. So when you show up, you go to check in, say, hey, here's your glass of, you like Maker's Mark on the rocks. Your lady likes a glass of champagne. It's specifically Prosecco. They don't like Moscato. Okay, cool. Now here you go. And then you get up to your room. Maybe it's morning and your coffee. Well, you take an Americano. She takes a caramelized latte, whatever it is. So that's just waiting for you. So it's this higher end, sophisticated luxury experience. They have the versatility of Airbnb in the sense of how many rooms you get per unit, so to speak, but the consistency of a hotel with hotel amenities. So they have that active in Vegas right now. Second one going up in Vegas. Trucks and cranes are moving. This is not an idea. It is in motion. And then the third one is coming to Scottsdale. And there are several more in Scottsdale that they're going to put the AI component into normal floor plans. So they're raising $110 million. The general partner is the largest developer in Nevada. His name is Philippe Zayed. You can look at him online, Ziade. He is also one of the largest developers in the country, and he's put in so far $10 million of his own money because he believes in the product, and obviously proof of concept, it's already working in Vegas. He's going to put in more of his own money across time, but right now we're raising money in several tranches. The first tranche is $30 million. So he's covered 10 of that. We got 20 to go. So we're working on raising for that. My challenge there has been that a lot of the people who I raise for, or I guess like the investors that I'm discussing getting into the deal with, want something they have more control over, and they don't want to be a $2 million contribution and $110 million raise. So we're figuring out ways around that. For example, one of my most wealthy investors, he's wildly wealthy. He literally could take down the whole project himself if he wanted to. He doesn't want to. He only wants to be in Scottsdale. He doesn't like Vegas. He is a devout Christian who thinks it's Sin City and wants nothing to do with the entire city of Las Vegas. No problem. So now we're trying to accommodate that seemingly successfully by, okay, you can take down the Scottsdale building and that's it. And you'll have a little bit more control and influence in that building, but nothing to do with the Las Vegas project and nothing to do with Houston, Miami, and everywhere else they're going nationwide with this project. So we're trying to figure out how to shrink each investment silo so that somebody can feel not like 2 million and a 110. They're like, what am I doing there? So that's the first one. That one's super cool. The other one I'm working on, we're almost closed on the raise in Page, Arizona. This is a boutique hotel, quite the opposite direction and maybe more on brand for a lot of the investors who might be listening to this podcast. And so to the extent that anybody's interested, please reach out at Mike Stone Group on Instagram. We have $200,000 left to raise on a deal that we are super successfully in motion. We are closed already because we did raise enough money to buy the asset. It's a pretty cool story. I'll tell it. So the seller of this hotel in Page, Arizona is part of the Patel family. This family has 60 or 65 hotels in their portfolio. This is the only one that's not a flagship. This is the only one that isn't Hyatt, Marriott, one of those. This boutique hotel was super successful for a few years until about 2018. After that, they stopped caring about this asset, and they've openly admitted that. They're like, this is like, we're doing so well in this portfolio, not to mention all their cash rich businesses outside of real estate, that this is nothing to them. And it's just a minor inconvenience that has been on their books. We're not even 100% sure that they've been covering their debt for the last couple of years. And you go into the place, the bones are great. We've had our general contractors out there and said everything structurally is fantastic, but the paint is peeling and the beds are gross. And like the staff, when we asked, one of our GPs walked in, asked the staff, what is there to do around here and brought up a couple of the major landmarks in Page, Arizona and around it. And she goes, I don't know. I don't travel. What? He's like, well, okay, what's the difference between staying in the second floor of this building or the first floor of this building? And she's like, I don't know. We just don't open up the second floor. He's like, well, I want a king suite. She goes, nah, we're just not doing that. Like, what kind of attitude is that? So that lady will be fired. And so we're taking over this building. We're doing a $1.3 million construction renovation. The purchase price went from $6 million, was a fair asking price because that's $120 per key, which is commensurate with the market, down to $5 million at $100 per key, which would have been a good deal too. And then we went back and forth. Are we going to do seller financing? Yes, and then no, and then yes again, and then no. And in that iteration of negotiations, credit to Micah Thomas, my GP on that, he said he was able to get the asset for $3.3 million, which is crazy. That is a ridiculous entry price. It's almost a can't lose already. Then we put the 1.3 into it, so it'll be 4.6 on that math, but I think we had 4.7 all day. Plus we have about another 300,000 in reserves. Everything is underwritten super conservatively. We've had STR Secrets look at it with Mike Shogren, Joel Weigel, and Isaac Oswald is actually a consultant GP on the project as well to make sure all the numbers make sense and they're safe. Isaac has 20 plus years experience in commercial real estate, including hotels. So everything's underwritten really safely. With that, we're going to take this asset from 3.3 back to 5 or 6 million, looking like it'll be 6. And then across the 10-year hold period, it'll be worth 9.4 when we're done. That's our intention to exit with a refinance in years 3 to 5 range, whatever makes sense. So with that, we anticipate, I'm not allowed to guarantee anything, especially as a GP, but we expect a 20% IRR, which is a phenomenal goal. And that should be very conservative. We also expect a 3.14 MOIC, which is multiple on invested capital, meaning you put in 100 grand, then it'll be worth 314,000 by year 10. I'm personally invested in this deal. I believe in it. I believe everything about it. And I'm also on the GP side. So if anyone's interested in learning more about that deal, Page is a very cool vacation destination for families, boaters, and mostly it's families and boaters. It's just a cool natural landscape up there, right near Lake Powell. A lot of drive-in traffic from Arizona, California, Nevada, Colorado, Utah. So it'll be a phenomenal deal. We're going to take it from a 2-star hotel to a 4-star. Does not make sense to go to a 5-star. It's not really a Ritz-Carlton type of a market. But we got a bunch of different ways that we can amenitize. Courtney Petrovich is a phenomenal designer. She's also personally invested in the deal and the designer on the project. And Micah is basically living there now. Adam Waltz is our other GP. And so, Mike is basically living on site, managing the renovations. So that's been a ton of fun. My last one is the Sedona Hotel. We're raising a ton of money right now. We actually need to still figure out what's going on with this, because for the Sedona capital raise for this luxury hotel, we're going to raise about $80 million for the resort itself. We're anticipating 52 units. About half of them will be luxury and about a third of them will be middle tier. And then the remaining will be just like cool geodomes and not so expensive, but just very cool landscape design type properties. To get the city of Sedona to allow us to do that, they want us to deliver on affordable housing. There's a 2,000 unit affordable housing gap in the market right now that Sedona can't figure out how to solve. They have a large budget and plenty of money, but they said, we don't want money. We don't know how to develop. We're not developers. We're not real estate moguls. We need somebody to come in and develop affordable housing that will not only solve the problem that you bring by creating a resort that now has more average median income type workers and hospitality service professionals who need housing, because we're going to make the problem worse by doing that. Solve your own problem, but then solve in excess and create additional affordable housing, because right now we just don't have the units. We're 2,000 units short for the need that already exists in the city. So we are now underwriting. I'm working with Joel Weigel and Zach Arco. Some of you guys may know them. They own Missing Sedona. I'm sorry, they will. But they also own Missing Texas in Texas Hill Country. It's a beautiful landscape resort. They're doing phenomenal on that project. And then they have about 15 others internationally. They have a bunch in North Carolina, Maine, Africa, Fiji. I think we have a Mexico one going up soon. They're killing it. So I'm going to be focused on the Sedona project for the most part, and then capital raising for all of them generally into a fund seems to be the plan right now. So we're early, but we're working with the city to figure out what and where we can do to provide affordable housing, including transit and sustainability efforts. So a very, very robust and interesting project. We're just got to do whatever makes the city happy to get them to allow us to put resort lodging in there. And from there, the returns will be absolutely phenomenal, because the affordable housing component will be a nonprofit and we'll have massive tax benefits there. And then the resort itself, it underwrites beautifully. So I'm not going to say numbers on that just because of how early we are, but it'll pencil plenty. So we're in really good shape on that. So I'm having a lot of fun. I'm enjoying the acquisition side on the short-term rental front with my existing clientele as a realtor, but I'm also enjoying the hotel opportunities in front of me as well.
Dude, you're a busy guy.
I stay busy.
You still have a lot more things. So if I wanted to go buy a hotel, right? Let's just say I'm just going to ask for me, because I mean, it does interest me. So cool. What would be the easiest steps to raise money, or like how would you go about raising money? Would you like say you're just going to buy? Let's just say you're looking at $1 million, and then you're looking at maybe like, I don't know. Let's just say you're looking at a rehab of 500,000. We'll say. Let's just say like a 1.5 total. So something small, right? Like, starter hotel, whatever. How would you go about that? Would you be giving out like partnership percentages, or what would you be doing?
Yes. So a couple thoughts on that. First of all is, yes, you're correct. Partners on that deal would probably not be too difficult to find, in the same sense that I'm helping people acquire short-term rentals far in excess of $1 million, right? So if you're looking for a $1, $2, $3 million asset, even a $4 million asset, you can probably find an individual investor fairly easily. The returns on that, as long as it makes sense to them for the capital injection and to you for the effort and the acquisition fee, then excellent, you guys are going to be in good shape. The catch is that at that 1, 2, 3, 4 acquisition level, you could be buying yourself a job. You have to be very careful that you underwrite a salary for a COO, a general manager rather, into your pro forma. Because if you don't have that, then you're the one answering the guests, answering the, managing your cleaners, managing hotel maintenance. That's not what you're signing up for a hotel for if you're in our types of networks that we, the two of you guys and I run in. What we're trying to do is become investors and owners, not hotel general managers. So you need to anticipate hiring a hotel general manager. And at $1 million, there's probably not a lot of meat on that bone, especially you're then paying the capital contribution back to the investor. So with returns, obviously, they probably want 20%. So I don't actually recommend it. I'm just passing through advice that I've gotten, of course, but I don't actually recommend a $1 million starter hotel, because that's going to be your job and your baby and you're stuck. I instead recommend going much bigger. I mean, the one we're doing is worthy of $5 or $6 million at 100 to 120 per key. That's 52 keys and relatively small. We are, then some of these other ones, like not necessarily even the Vegas chain of hotels, but let's say the Sedona hotel that I'm talking about. It's an $80 million raise. It's a lot more money to raise, but by the time we're done, none of us are going to be working in the hotel. We're going to be working on the business of the hotel. And Joel and Zach, who own the Missing brand, are running this hotel chain at the top. So even I, who will not, I will not be a GM on the project. I will just be an owner of this, even if I'm less involved in some of the other ones that Joel and Zach are doing. So going bigger is a better idea. The other thing, to answer your same question, at that higher level, even doesn't have to be 80, even if it's, let's say 13 million, right? 20 million. When you're raising for more than just a few million, what will help outside, is not just focusing on individual investors. That's where I'm starting, because why not? I have a network of individual investors through Savvy or through cool podcasts like this, where listeners might be like, hey, I'd love to throw $100,000 or $500,000 into the ring, or $1 million into the ring. I got one guy who's going to throw $2 million into the Page Hotel. It's like, there may be individual investors, high W2, high earning W2s or whatever, or just real estate professionals who want to get in the game. Love that. Happy to. But when you get into the higher level, it's going to be family offices who want to do $50 million deals. And you come to them with a 13 and they're like, I don't even want to open this email. And then above that is PE firms, private equity funds who want to contribute $100 to $400 million in a deal and say, oh, you're going to come to me with something for 80 million. I don't know. That might not be for me. So when you get to that higher echelon, it's like with the 1 to 5 million is probably individual investors and probably a job. 5 to, let's say, 20 million is going to be some individual investors and some family offices. Over 20 million, I think, is when you start looking at PE firms.
Yeah.
And then you're just putting the pro formas in front of them. And, I'm networking at capital raising groups and just putting myself out there. Even podcasts like this, I'll clip up some content and let the world know, hey, this is what I'm up to. If this interests you, reach out to me. But you have to kind of be branded as the person who understands that to put them in a good position.
So, dude, okay. So we need to do like a part 2 and a part 3. I feel like we could do like a 3-hour podcast with you, or a 3 to 4 hour podcast. So
sign me up.
I mean, we do got to wrap. So, but I'm gonna have you tell everybody where to find you, how to put it in your projects, all those things. I thank you for coming. I want you to jump back on that link and reschedule another one.
Sure.
And then me and Austin will make time to like go farther, like longer, because I think
Nice.
that we can do like 3 to 4 episodes out of all this. You got to design, and there's so much stuff we haven't even talked about, even as to like where your hair went. So we haven't even got that far,
You don't like my haircut?
I love it, dude. It's great, bro.
I did it this morning. Come on, man.
I love it. You know what? Austin actually just cracks me up, because I just realized when you were like, he's the best dressed guest, and then when he said he was a lawyer, I'm like, oh, fuck, it makes sense. It makes sense. He's dressed like a lawyer. That makes sense.
I love it.
I used to dress like a slob when I was a lawyer. Now I'm like, hey, how you doing?
Yeah. A lot of lawyers are like hot messes, dude. Like their whole life is just a hot mess. It's like, I'm like, why did you buy this? You had 10 of these. I don't fucking know. I don't have time to go look. I'm like, okay.
Yeah. That's exactly right. That's why I'm free.
Aunt Ava. Sorry, Aunt Ava. Love you. But anyway, but yeah, let everybody know where to find you, bro, and like how to like donate, and then let's get on another one.
Sure. I'd love that.
Sure.
I appreciate that very much. I enjoy talking to you guys. We could definitely run this and keep it going. You guys can find me most easily on Instagram at Mike Stone Group. My Facebook is just Mike Stone. You could go through the Savvy Investors group or something like that if there's a million Mike Stones, which there are, but there's only one, this Mike Stone. So find me on Facebook or Instagram is the easiest. I can direct traffic from there. Again, it's at Mike Stone Group. And then if you want to talk about investing in hotels, certainly my pleasure. If you want to talk about acquiring short-term rentals, my focus is Sedona and Scottsdale. Anywhere in Arizona is cool, but the best returns are in Sedona. And so I will gladly teach you guys about that. Or just good to network and make more friends. Appreciate you guys having me. This has been great.
Dude. I appreciate it. Yeah, I want to talk more about hotels for sure.
Sounds good, man.
So awesome. All right, with that.
All right. Thank y'all for listening. Peace.